Forex. And right now, folks, we're going to talk to our man Teddy Kekstadt as we do each and every Wednesday at 9:40. And folks, head on over to the front page of TFNN. Right under the newsletter tab, you'll see the Tiger Forex by our man Teddy Kekstadt. You can sign up, folks. It's $97 a month. Teddy's got new issues every Monday morning, updates throughout the week when warranted. You get an archive webinar in there as well. And don't forget, under the services tab, 2 great webinars. Capitalizing on time with calendar stock option spreads, as well as Japanese candlestick pattern stock and option strategies. Both of those just $97. You sign up, folks. They're right on your member page. They're there forever. You watch them as many times as you like. You get a little time during the holidays. Maybe spend that time. Teddy Kekstadt, good morning.
Good morning, Tommy.
So we're it's a Fed day, of course, Teddy. The market thinks we may get a cut, but it seems like yields are on the rise recently. What do you think of some of this market action?
Yeah, I think today is going to be probably a pretty tight sideways trade going into the number. I'm pretty positive, or maybe not positive, but optimistic that we'll see a quarter-point rate cut today. The question I heard you talking earlier about now the expectations of only having a half-point cut next year and not at least until sometime next summer or something like that. I don't buy that. I really don't. I think that you're going to see every bit of a 1 point cut next year, maybe even 1.25 points. Now, as to when it begins or whatever, that's a whole nother story. But I would say you're going to see some very interesting numbers as we roll into the beginning of 2026. And unless there's some really divisive, I would say, inkling of a trend going in a way that they don't want to cut rates, where there would be some sort of major acceleration with the stock market and what have you, or something like that, which could occur. You know, it's December right now. It's not January, beginning of February yet. But unless that occurs, I don't think that it's going to happen. I heard you talking about the global shift as far as raising rates, but you got to remember that globally they were quicker to the table to cutting than we were initially, if you will, and I can see where that stance is there, especially when you have the Bank of Japan. You remember the Bank of Japan raised rates this year, Yeah. So I mean, I know that wasn't the narrative that most central banks were pushing, but I think that was kind of because they were leaning on us. It's pretty much done, and I think another reason is that you're seeing this tone with the other central banks is that right now we have a Fed chairman that's totally in line with them. They're all part of the same country club. I got a feeling that whoever the next Fed chairman is going to be pretty much neutral of the other central banks, which means I don't think they think they're going to have as much influence. So if anything, I think now they're going to try and push the envelope the other way to, you know what I mean? So in the short run. So, and also I think it's also another way to prop up some of their currencies, so I think that's another really, really big thing that's going on. Like, I wouldn't doubt that you see a head fake spike today off the number. I wouldn't get married to if yields start to go down significantly off of the number this afternoon going into the 2 o'clock close. I wouldn't expect very much follow through, if you will, afterwards should that move occur. The reality is once we have a quarter point cut today, it's already factored in. So if we don't even think about seeing a cut until this summer, well, that's 7 months away, So that's a good reason to see some profit taking as far as that's concerned with interest rates. But I don't think you're going to see any overly extended move for higher rates going into the next, say, few weeks or even next couple of months, even if there is no leaning bias towards a rate cut for at least 6 months. I just don't think that there's anything that is really going to be valid for that. We could be in a very big wide range trade actually for the next probably 3 to 4 months maybe.
I like it. It aligns with a lot of what I'm thinking myself. So I appreciate the take as always. And yeah, because realistically, right, the market just kind of priced that in. Even since November 25th, man, the 10-year's up 20 basis points since that time. You got the 2-year rising as well. And I was just looking. It's remarkable. So we have this meeting today, and then we have a meeting in January, March, and April. So 3 meetings left under Powell. And then the first meeting under a new Fed chair, I believe, is going to be June 17th. and they're going to get 5 full meetings the new Fed chair is going to get. So even if you think we're waiting until then, right, the market's pricing in 50 basis points of cuts. And meanwhile, just if you wait for the new Fed chair, they're going to have 5 meetings. Even if they go meeting, skip a meeting, they might get 3 in by the end of the year. So I agree with in terms of saying, if you heard for the first time, it seems like maybe there's an opportunity and maybe we chop around. But at the 10-year at 4.2 and the market only thinking we're going to get 50 basis points of cuts, I kind of like the risk reward there that, just like you're saying, maybe we get more cuts than the market's thinking, which hasn't happened in a while because the market got so wild with how many cuts it was pricing in for a period of time. Right? Does that make sense?
Right. Well, we were having that conversation just a few months ago. Right, that they were looking at to have over a full point over the next 12 months, and we were talking about that just a couple of months ago. Crazy. Now you're looking at the same talking head saying that maybe there'll be a half a point cut. So I'm sticking with where we were at before. I'm not going to go riding on this new headline, if you will, going into a Fed meeting.
Sure. It's going to be interesting to see what happens today because on those last meetings, like you talked about, man, there had been, we got the cut and then rates accelerated higher, right? Today, we actually have the acceleration ahead of the meeting. So maybe it's a bit muted, as you said. What do you think about crude? Crude under pressure, man. We're pushing $58 this morning. What do you think about that crude aspect?
Let's see. I'm pulling it up right now.
57.81 actually. As I was talking, it's dropping.
Yes, I like the sell-off this week. I really do. I really do. I think it was a nice swing high that we put in a couple days ago. And once again, I think that even if you see rallies in the crude market between 59 and 61, I think that's pretty much your high zone, And I still think that by Christmas, we could see $54, $53 oil. That's what I'm looking for. I think before the year is out, I think for Christmas we're gonna have lower gas prices in a big way because crude's gonna actually demand it.
Yeah, the charts are saying it, man. Lower lows, lower highs, pressure to the downside. I mean, like you say, very difficult to get any kind of a bid above just a few bucks above where we're at right now, basically.
Now, 56.50, right? Like I said, around there, 55 bucks. I think you probably will find a floor there. I would get very cautious about being short in that area, if you will. I would look to take a profit, or at least lay off a position. I'm not looking for any major trend move right now, but I can see easily us hitting support a little bit for sure.
Yeah, I always joke about it, but I find myself saying when a gallon of gasoline becomes almost cheaper than a gallon of water at the store, and we're not quite there yet, but we're pretty close, man. And the utility value of a gallon of gas, when I can get water out of my faucet, pretty remarkable. That's how cheap gas is right now, man. Teddy, great stuff as always. Folks, check it out. This is a great time to sign up for the Tiger Forex Report. Check out some of those webinars. It's Fed Day. We got some volatility. Teddy, appreciate it so much, man. Look forward to talking to you next week, and I appreciate it, man. Thanks so much.
Sounds great, Tommy. You take care.
How about those Bears, man?
Oh, my God. It's unreal. So we'll see.
I love it. All right. Yeah. Teddy, thanks again, man. Have a great week. We'll talk to you next Wednesday.
Take care.
Take care. Folks, check out that Tiger Forex Report, Teddy's outstanding webinars. We're coming right back for one more segment.